Michelle, thanks. After getting off to a hot start this year, new economic data shows inflation cooled last month in the U.S. WRAL's Chris Lovingood joins us now with how the news is providing a glimmer of hope for all of us. Chris.
Well, Renee, how you view today's CPI report is kind of like the whole glass half empty, glass half full approach. Yes, there were improvements in prices of certain goods such as food, clothing, and furniture. However, those prices didn't change much, and it's definitely not the significant difference many people would prefer to see. So let's first take a look here at how the stock market is reacting to the report's release. The S&P 500 and the NASDAQ have risen to all-time highs after the report. Right here, you're seeing the Dow Jones in the green across the board here. But we wanted to also know if you, the consumer, can expect any sort of bigger break in the future. We interviewed economist Gerald Cohen with the Kenan Institute of Private Enterprise. He expects rate cuts at the end of the year and predicts the effect of higher interest rates will carry into what he called a, quote, meaningfully slower economy.
And so the cost of borrowing money, if you're trying to buy a new house or refinance or buy a car or buy, kind of a refrigerator and, take out a loan for it, all of those things are going to remain, the cost of borrowing that money is going to remain high.
Again, not much of a change there. Cohen also noted that inflation is still floating around that 3.5% number, which isn't the 2% number the Fed would prefer. And so he says that's why the Fed is unlikely to lower interest rates.
Not as soon as people would like, but eventually perhaps we'll get there. Chris, thanks.